Hi everyone and welcome to this video. Today I'll be explaining the wedge. The wedge is one of the most trusted price patterns. Could be used in any market like the FX market, like the stock market, and so on. So let's get started. Right now I'm going to begin with the two types of this pattern. So we have a bullish pattern and a bearish pattern. The bullish pattern is simply something that looks like this. So you have two lines, something that looks a triangle, but it has a tendency to the downside. I mean, it looks like that it is heading towards the downside more than it's a symmetrical one or whatever. So to the downside here, this line would have 2 points on it. To the upside we have 2 points on it. So overall we have 4 points that simply form this pattern. So we have the first point here. This is the first peak, and then goes the first this is the first trough, then goes the first peak, then goes the second trough, then the third, here the fourth peak. So there you go, you have 4 points, the components of this pattern. So there you go, 1 2 3 4. Okay, so now you have a bullish wedge. When to enter the market? Entering the market would be you can simply enter the market after the breakout of this point. So just draw a horizontal line here, and if the price closes above it, you can simply go long. Okay, and your target is going to be the distance between the first trough and the first peak. So whatever that is between them, okay, is going to be your take profit. So say that the distance from this point to this point is 50 pips, then your take profit is going to be also 50 pips after the breakout of this point. Okay, so this is simply how it works. So this line equals this line. Okay guys, after the breakout. And as for your stop loss, we're going to follow this method 1 to 1. What does it mean? It simply means that if your take profit is 50 pips, then your stop loss is going to be also 50 pips. Could be less than this, okay, but not more than your take profit. Okay, so this is the best risk reward ratio that we are following. As for the second one, the second pattern, that is the bearish one. So you will be having, I mean, the same thing but in the opposite direction. So now I'm just to keep in mind that I don't care whether this is a continuation pattern or a reversal pattern. I just care about one thing, the key level. Now if you look at the chart and if you see something that looks like this, then your entry point anyway would be above this level. You can go long, you can buy after the breakout of this level. If you see something that looks like this, then your entry point is going to be after the breakout of the downside. So if you have something that looks like this, I'm just trying to imagine a scenario here. So 2 points on the upside and 2 points on the downside like this. That's it. And I'm waiting for a breakout for the downside. So here I have, as you can see, 1 2, and here also 1 2. So 4 points. This simply these points would simply make the pattern. Okay, so I'll be waiting for a breakout. Okay, after the level goes through this level, below it to be accurate. So I'll be waiting, then I can go short. Okay, the distance, your take profit is going to be the distance between this point and this point. okay, to be added to this level, and then there you go. This is your take profit. Your stop loss, we're going to be applying the same thing as 1 to 1. So here we can go short. If you find something that looks like this on the chart, then you might go short. If you find something that looks like this on the chart, then you might go long. Now this could be applied on any time frame or any currency pair, whatever that you want. Now since we're trading the forex market, then no limits. If it is another market like the stocks market and so on, I mean, things would change a little bit. I mean, so let's go to the practical part here, which is the platform. This is the platform of this is MetaTrader 5 platform, so you can simply use it to find these good patterns. So as you can see here is a wedge, a bearish wedge, but it is positive. Why? As I told you before. So here we have 2 points, and here we have 2 points. So we have 4 points here. After the breakout of this level, you might go long, and your take profit is going to be the distance between this point and this point, okay, to be added to the broken level like this, okay. And here we have another one, a bearish one as well. We have 4 points, 1 2 3 4, breakout above, then boom to the upside. Another pattern, but this is simply a bearish pattern, okay. Why? The other one was bullish because the target of it was bullishness. Now this one is bearish because the target of it is bearishness. So as you can see here, 1 2 3 4 1 2 3 4. I mean, this sequence is really important. I mean, is the best. So after the breakout of this point, I might go short my target, the distance between these two levels here, and there you go. Okay, so that's it. This pattern is the kind of patterns that would need too much practice. Download your platform, start practicing right now. You need to train your eyes. You need to understand what's happening in the market through these patterns. This is how it works. So that's it. I hope this helps, and thank you for watching the video.